They say a rising tide lifts all boats, and that has certainly been happening with the artificial intelligence trade. But let's not forget that the tide also goes out at times as well. So how can you make sure you stay afloat when all of that happens? Dan Ives is the global head of technology research at Wedbush Securities, alongside Todd Rosenbluth, the director of research at Vetify. Let's kick things off, gentlemen, with Dan. And you just launched an AI-focused thematic exchange-traded fund. The ticker is, maybe not shockingly, IVES. Ives, your last name. Your name is literally on the line with this one. So let's talk about why and what exactly is the impetus behind putting an AI-focused thematic ETF on the market.
No, great. And look, and it's awesome to be here. Look, I mean, to me, it's really, I wanted a thematic way for investors around the world to ultimately, invest in the theme. I mean, when I travel around the world, how do you invest in AI? So this was really based on my AI Ives 30 report, understand who are the derivative beneficiaries, whether it's software, chips, consumer, some under the radar, some maybe on the autonomous side. And basically, this is a dynamic list. It's a dynamic 30 names. Every quarter, we're going to change in terms of some who come in, who ultimately come out. But Dom, for me, it was really all the work we do to put it thematically in a way that investors, whether retail, institutional, could invest in this AI theme.
Now, it's a concentrated portfolio. It's only 30 names that we're talking about here. Without giving away the secret sauce, because you're a fundamental analyst, you look at certain factors and whatnot, what are the common elements or factors, if you will, that go into why these 30 names at this point? And you mentioned the rebalance. How exactly then do you know, based upon those factors, whether quantitative or qualitative, what then maybe goes out and what else would then come in?
Yeah, it's a great question. I mean, look, we spend all of our time, whether it's here, whether it's Asia, across Europe, understanding what are the technologies driving AI. So whether it's on the chip side, in software, what ultimately from an engineer perspective, from a customer perspective, who's ultimately driving, who's winning when it comes to the use case, whether it's Palantir, is it MongoDB, is it Snowflake? Then on the consumer side, whether it's from names like Meta or some of the smaller names, who ultimately could play from a consumer perspective. So for us, it's our research. It's what we spend, my team spends all of our time doing, trying to understand who is driving the use cases, where is the technology going, but most importantly, what are the second, third, fourth beneficiary, then the derivatives of AI.
Now, speaking of those orders of differential, those derivative type plays, where are you seeing most of the portfolio drift towards? There's 30 names. Are they mostly the consumer AI names? Are they mostly the hyperscaler types? Are they mostly the hardware or the software or whatnot? What exactly do you see right now being where the most heat is, so to speak, in those picks?
And in terms of the heat, like it obviously started off as chips led by NVIDIA, and of course they continue to be a core top holding, but it's software. In other words, the use cases are going to be driven in software, and that could be from hyperscalers to use case, whether it's Pega, whether it's Palantir, whether it's Mongo, because I actually think right now we're in the software phase. I think software is going to be driving really a lot of the use cases. And I think we've seen it with Oracle and others, right? Because to me, that's really going to be the epicenter of the AI theme over the next 6, 9, 12 months in terms of software, but it's trying to understand who within software. Just because they say AI on a conference call doesn't make them an AI player.
Now, Todd, this is an interesting one for a lot of investors out there as well, because this particular fund and these stock picks enter a kind of growingly crowded field in terms of thematic AI plays. From your kind of macro perspective, looking at the entire ETF market, just how competitive is it for asset managers and advisors to garner funds into the thematic ETF trade for AI? Or is the market, the TAM, the total addressable market, so big that it doesn't matter how many people enter because the demand is there from amongst investors, whether they're retail or institutional?
So we at Vetify, we find that advisors are using roughly 5 to 10% of their portfolio for more dedicated thematic investing. So some of the AI trends, we're going to see exposure in the triple Qs, the NASDAQ 100 ETF from Invesco and other technology-oriented ETFs. But there are some dedicated AI ETFs. The Robo Global Artificial Intelligence ETF, the ticker is THNQ, is a good example of that. It also takes a research-driven index-based approach. It's equally weighted around 50-55 stocks, and it's looking at companies that are both infrastructure and application layers tied to AI. So that's going to cover some of the technology areas that Dan talked about, but think THNQ also is going to have exposure to healthcare and robotics and sensors and things like that.
Let's also talk now, Todd, really quickly about the types of fees. It's always a big issue for ETF and fund investors out there. When it comes to this type of investing, it's these types of thematic ETFs that may charge a certain kind of fee structure versus just, say, buying the triple Qs, the SPY, or anything else with a tech overweight these days, specifically the Mag 7. So when you look at the fee landscape, is there a premium being charged by some of these thematic ETFs with regard to AI versus just, say, a tech-focused index fund?
Yes, so thematic ETFs can and we think should be able to charge a bit of a higher premium than your broad index-based product. You mentioned the triple Qs, or VGT, for example, is a low-cost information technology ETF. But it's important to go beyond the fees, because Dan's fund, Ives, and THNQ and other thematic ETFs tied to artificial intelligence are going to be different. There's going to be devils in the detail with the construction. And so it's worth looking at what's inside the portfolio, not necessarily just the name of the label and the fee.
Now, Dan, many of these ETFs, thematically or otherwise, are market cap weighted. Is your fund cap weighted? And if so, that kind of leads you towards certain types of stocks that are out there. So when I say fees and I look at the outperformance that a fund manager would strive to go for, what exactly does your fund or your picks specifically do to garner the kind of outperformance that helps an investor justify the higher than average fees versus a traditional index fund?
No, it's a great point, Ty. It's a great point. So look, I think for us, it's not just Mag 7. It's not just that those first 4 or 5 names. It's trying to find who are those other names, whether it's 5, 10, 15 of them, that maybe investors right now, they're not even viewing as AI names. And we have a lot of those, in there, especially in software, in chips. It's trying to identify names that maybe today, thematically, you don't even consider an AI name. But it's a way that investors could look at the AI theme, and they're not just focused on chips, they're focused on software. Consumer, like obviously Meta being on there is a good example. Robotics. Like Oklo is one of the names, is a good example because of nuclear. So it's our way, it's the way that we think about it and the way that we work on that theme. But again, those are names where, to me, it's very important to understand there could be a name today that's not on there. 6 months from now, if we find that that's a name that's become more and more of an AI play, then we'll put them on there.
How does your index, Dan, track or sort with regard to the weightings in those particular funds? Are they all equal weight to start at any kind of a rebalance period, or are you weighting them specifically towards a certain type of thing like market cap, or based upon the fundamental heft of the idea or how good of an idea it is versus, say, 1 to 30?
It's a combination. So in other words, the weighting is not just based on market cap, it's based on what I view as basically the ones that maybe have more of the power from an AI perspective. That's why you'll see at the top, I mean, if you look at names like NVIDIA, Palantir, names that are highest conviction. Look, there's also names where maybe they're a high conviction name today. They stay in the AI Ives 30, but they go to the bottom part of the list, depending on what they're doing. And look, and Dom, my whole view here was to make this dynamic, not static. Because around the world, investors always say, how do you play AI? How do you play the theme? Now it's a way all of our research could put it in a way that investors could play this regardless of where they are and who they are.